Hello students. Yesterday, in our previous class, we discussed about components of government budget or structure of government budget. Today, let's discuss about revenue receipts from budget receipts. Budget receipts, it has two elements, two components, revenue receipts and capital receipts. Today, let's discuss about revenue receipts. Tomorrow, we will discuss about capital receipts. Clear? Are you ready? Revenue receipts we mean. It is the major source of revenue to the government. And using that money, government tries to obtain development in the country. That's a major source of meeting expenditure of the government. Revenue receipts we can define in terms of liability and assets. Revenue receipts are such receipts which neither creates any liability nor cause any reduction in the assets of the government. This word, liability and assets, we have to use here to define this revenue receipts. Means because of the revenue receipts, it neither creates any liability to the government and it nor reduces any asset of the government or cause any reduction in the asset of the government also. It's not a liability, not an asset reduction in the assets of the government. So when we study this topic, there are two essential conditions that can be derived from the definition what we discussed here. Neither creates a liability nor cause any reduction in the assets of the government. First of all, these revenue receipts do not create any liability for the government. It's not a liability. Liability means the money that can be paid back to the concerned. It's a liability. But it's not a liability. Actually, it's a receipt. If this is a receipt, it's a matter. And second thing, do not cause any reduction in the assets. Reduction in the assets means selling of government companies and its shares. Such kinds of things not happening in case of this matter. It's merely or purely collection of money, revenue from the individual. That's the revenue receipts. Clear? So means it is not a liability, it is not reducing any asset of the government. For example, taxes. Taxes means that's a source of revenue. It's not a liability. While borrowing is a liability. Government has to pay back the money what is taken from the sources from anywhere, from international organization or domestic organization, whatever it is that government has to pay back. Clear? That is why we can say these are the revenue receipts, neither creates a liability nor reduces any asset of the government. So let us divide these revenue receipts into two. There are two sources of revenue receipts. Revenue receipts can be categorized into two. One is tax revenue and second one non-tax revenue. Tax revenue and non-tax revenue. First of all, let's discuss about what is tax revenue and what are the elements of tax revenue. What is tax revenue? Tax. A tax is a compulsory contribution or compulsory payment made by the individual towards the government. It's an essential payment. That is a prime source of revenue to the government. It's an essential one, and this money, it is spent on the welfare matters of the country. In order to increase the welfare of the poor people, government spends this money, this tax, what is collected from the rich people, that is spent on the welfare matters of the people. Such a way, tax is an essential payment made by the individual towards the development of the nation. We can say like that. So, in this regard, taxes and other duties It should be paid by the households, firms, and other institutions. Everyone has to pay taxes and other duties. Those are all considered as to be the tax revenues. So for the convenience of analysis, let's divide this tax revenue into three major headings, three major heads. First classification is done on the basis depending upon burden of the taxation. First classification is done on the basis of burden of taxation. Second classification is done on the basis of tax base. So first one, burden of taxation. Second one, tax base. And third one, on the basis of final tax burden. So considering all these 3 points, let us divide this tax revenue into 3. First of all, real tax burden. Second one, tax base. And third one, a final burden. It's okay. First of all, let's discuss first one. On the basis of real tax burden means who is having that burden of the tax. The real burden is on whom? On the shoulder of whom? Considering that we can categorize tax into 2. Considering real tax burden, taxes can be divided into 2. Progressive tax and regressive tax. What is progressive tax? Progressive tax we mean, as the name it's mentioned, progressive. Means when the tax rate increases as long as income increases. Means when income increases, tax rate also increases. It means that the rich people has to pay more tax because when their income increases, tax rate also increased. Rich people has to pay more. Government collects more taxes from the rich. Such way, according to their income, they are able to pay the tax. That is the progressive tax. While regressive taxes, it's not a opposite of that. Regressive tax means that rate of the tax remains constant for both rich as well as for the poor. Understood? Means rate remains constant. Both people, rich as well as the poor, has to pay the same amount of tax. The real burden is on the poor people now. Why? Rich people, there is no problem. They can pay the tax. But the poor people also has to pay the same tax. The sale tax is upon like that. Tax on the salt, tax on the sugar, tax on oil, all these consumable things, tax rate is same for the rich as well as the poor. But in progressive tax, government can earn more money from the rich people than the poor. That's the first category of taxes on the basis of tax burden. Clear? Second one, on the basis of tax base. Considering tax base, on what element, what base we are fixing the tax. Considering the tax base, tax also being divided into 2. One, value added tax, VAT, and 2, specific tax. Value added tax and specific tax. So, value added tax we mean, now it's changed. Value added tax we mean, it is a tax imposed by the government on each successive stages of the value of the product. A producer is adding more and more things in order to produce a commodity. From each successive stages, government taxes. Government imposes tax upon that one. Understood? That is value added tax. Now it is changed. You know that what is a new tax? This value added tax is replaced. And what is a new tax? One element tax, one time tax, GST, goods and service tax, adopted by the government now. So this value added tax is the one. And second thing is that, so then one more thing. What is value added? Actually, this value added, it is a method in the calculation of national income. When you study macroeconomy, you study that value added method. So value added is equal to, study this equation now, that you can use in the national income lesson now, after that. Value added is equal to value of output minus value of intermediate consumption. Intermediate consumption means that in each successive stages, what we have done there, added there to increase the value of the product. In the flour, the bakery owner is adding egg, oil and different things to make the bakery items in his boma and all. Such a way, how much we added the value, each and every stages, as per the increase in the value of that one, government is taxing that one. An amount is taxed. An amount is imposed as tax. That is value added tax. Clear? But specific tax, it means that it is a tax on the basis of units, size or weights. Is it? So in such a way, it is taxed. For the extra size, we have to give extra money. Size changed. Or the number of the units. More units are there, extra. More weights, extra. So all these are extra taxes, specific. So specific tax means that tax on the basis of its units, size and weights. Tax, that's a specific tax. That also coming under on the basis of tax burden. Sorry, tax, not tax burden, on the basis of tax base. Clear. And third division, it is done on the basis of final tax burden. Means who is having the final burden, who imposes the tax, who pays the tax, is it? So in this regard, we can divide tax into two. There's very important division: direct taxes and indirect taxes. Let's see what are the direct taxes and what are the indirect taxes. Before discussing direct tax and indirect tax, three terms we have to study. One is impact of the tax. Second one, incidence of the tax. And third one, shifting of tax burden. What is impact? Impact of the tax means immediate money burden. When the government imposes taxes upon a person on whom this tax it is creating impact, whom it is coming first. That is the impact of the tax. Incidence means that ultimate burden of the tax, final burden, who paid the tax. Why we are saying both are same? No. And some cases this burden is also being shifted from one shoulder to the other. So once again, impact means immediate money burden, incidence means ultimate money burden, shifting is shifting of impact to a other person, shifting of tax burden from one shoulder to the other. That's these three terms. Let us discuss one by one. What is direct tax? In case of direct taxes, this impact and incidence is upon one person. On whom the government imposed the tax, the person has to pay the tax. There is no way to exempt from the tax. No way of evasion. Officially, no chance. Tax avoidance, people may try some other illegal ways. So officially, there is no way to escape from that. That is impact of the tax. Understood? Means, suppose government imposed income tax upon me on my income levels. So I have to pay the tax. Incidence is on my shoulder. Sorry, impact is on my shoulder. The same way, I have to pay. Incidence also on my shoulder. No way to escape from that way. I cannot say that you have to pay my income tax. So its impact and incidence upon on me. So income tax, it is very clear. Income tax, wealth tax, capital gains tax. All these are the different direct taxes. Clear. While in indirect taxes are such taxes, it can be imposed upon the income of the individual, on the consumption expenditure of the individual. It's on the consumption expenditure, because as per the consumption increases, he has to pay more taxes. There is no consumption, no need to pay any tax. How can we escape from this indirect taxes? No need to buy any product. Then no need to pay any tax. Is it possible? No, it is impossible. Whenever we are living there, we have to spend, we have to consume. So that is why indirect tax is the tax on consumption expenditure of the individual. Understood? So goods and services, when we are buying goods, when we are availing services, all these taxes is paid. Then let's analyze what is the situation of impact and incidence. Yes, in indirect taxes, we can say impact is upon one person, incidence is upon other person. In this process of shifting this impact to other person, means we can share the matter to other person, that is shifting of tax burden. How you know? Simple. A producer, a manufacturer, he produces a commodity. A soap he is manufacturing, a good toilet soap that we can buy from the shop. So in that soap in the wrapper, we can see that the cost of this soap rupees, it is MRP is 15 rupees. Do you think that cost of the soap is 15 rupees? No. Actually, the cost of the soap will be 10 rupees. 10 rupee cost, 2 rupee this producer took profit from that. So, and 1 rupee, suppose imagine he might be paid sales tax to the government. So total he spends now how much? 13 rupees. 10 cost of production, 2 is profit, 1 is a tax, 13. When he is selling his soap to an wholesaler, he will charge from him 13 rupees because he need 30 rupees. When the wholesaler, when he gives the soaps to the retailer, he will charge his own profit also in that way. How much? He need 1 rupee. He needs 1 rupee means 13 plus 1, 14. He will charge from the retailer. So retailer might have got the soap from the wholesaler by paying 14 rupees only. When the retailer sells the soap to a consumer for us, he also should get profit. And retailer also will charge 1 rupee. So considering all this matter, the manufacturer fixes the price of the soap as 15 rupees. So in this 15, 10 only the cost. 2 profit of the producer, 1 tax of the producer. So total 4 rupees profit. 2 for the producer, 1 for the wholesaler, 1 for the retailer, and 1 rupee paid. So tax, first 2 paid, tax paid by the producer. Impact was upon the producer. Finally, who paid the tax? We paid the tax. When we bought the soap from the shop, we paid the tax along with the price. That is why it is written MRP of all taxes, including all the taxes and all. Understood? So impact was upon the producer and incidence was upon whom? Upon the final consumer. So shifting this burden, shifting of this impact to the incidence, shifting of this tax burden from the producer to the final consumer, that process is known as shifting of tax burden. Impact was upon producer, incidence was upon final consumer. That is in case of indirect tax. But in case of direct tax, both are upon the correct person where the tax is imposed. Understood? Direct and indirect tax, considering impact, incidence and shifting. Clear. And what are the examples of indirect taxes? Sale tax, customs duty, excise duty, all are these examples of indirect taxes. Clear. These are the tax revenue sources in the revenue receipts. Second source of revenue, it is non-tax revenue. Tax revenue we discussed now. Next one is a non-tax revenue. By non-tax revenue we mean these are the revenue source of the government other than taxes. Other than tax, government also earns money from the people in terms of non-tax. Means all sources other than tax revenue is considered, or tax receipt is considered as to be non-tax revenues. So many sources are there. Few important sources we'll discuss here. First one, fees. Fees is the major source of revenue to the government. Fees means what? To cover the cost of recurring services, we are liable to pay some amount to the government. Registration fee. When you are buying a property, some service of the government is required to change the property ownership to you with the help of the registration department. So you are paying registration fees to there. When you are going for driving license to avail the service, we have to pay some amount. That's the license fee. While license fee or driving license fee, also we can say it's a permission for something. Is it? When you are having the driving license, you have the permission to drive the vehicle on the government properties, on the roads, property of the government, infrastructure of the government. That's a license. When you are getting license, driving license, that's a fee for giving permission. While passport, with the passport, we can avail the recurring service of the government. What's the service of the passport? We can travel other countries of the world. Such a way, fees is the major source of revenue to the government. Second thing, fines or penalties. Fines means the amount paid for the violations of the rule. That's an economic punishment, like jail and all. Economic punishment towards the individual. Means if you're violating the rule while driving the vehicle, using the driving license, you are driving the vehicle and you violated the speed limits, you have to pay fine to the government. The foreign people, GCC people, it's very familiar the word in Arabic, mukhalafa, fine. Is it? So you have to pay. If the speed limit crosses the limit of 10 kilometer, 20 kilometer, this fine, it is different. And the same way, it is there applicable all over the world to reduce the accidents and to provide some knowledge in the minds of the drivers regarding how to drive the vehicle properly. So this is an economic punishment, fees and fines and penalties. Clear? That's the second source of revenue to the government in terms of non-tax. Clear? And third one is that escheats. Escheats are a new form of source of revenue. You know, escheats means somebody died without any legal heirs for them or any written will paper for him. So, who is the owner of his property? There is no successor for him. Legally, no heirs. So, his property is taken by the government. Government will acquire the property. Such things that are also coming as the source of revenue to the government. Estates. Understood? So, legally, a person is there no issues in that way. So a person died without such kinds of will paper or in legal heirs there. So their amount, their wealth, everything should be taken to the government. Fourth one is that special assessment. Special assessment we mean that is due to the increase in the value of the property of the individual because of the activities of the government. The property value is appreciated in case of an individual. Definitely the person has to pay some amount of money to the government. For example, in your area, one airport has come or a metro railway project came. So because of these things, the value of your property also be doubled. 100% increase will be there, the property value. So in order to assess this value, Revenue Department will assign an officer, special village officer, special assessment. Its category is like that, special assessment officer. So he will assign the value, and during the time of registration, the registration department will ask, take the paper from the village officer to assign the value, how much increased. Accordingly, you have to increase the value of stamp paper and registration fees, everything. Because before the value of the property, it was 1 lakh for the cent. Now it became 10 lakh or 50 lakhs. So definitely that proportional change you have to pay some amount to the government. Why? Because of the investment of government in that infrastructure only, this value also changed. Even if government invested there, so you also got the advantage. So that's why you have to pay some amount of money towards the government. That is special assessment. Clear? That was a special assessment. That's under the control of Revenue Department in India. Clear? And then some other sources, forfeitures. Forfeitures means that suppose a person, he failed to maintain the contract with the government in case of the construction of bridge or anything, or any official construction. So the government can charge a case against him. So in this regard, he has to pay a compensation to that. That is forfeitures. Clear? And these are the major sources of non-tax revenue to the government. Other than this one, many are there, many small sources are there. Interest on the loans, given by the central government or state governments towards the individual. Then otherwise, other than that, profits and dividends received by the government from the public sector companies. Now, how many public sector units are there to earn profits and dividends from that way? So it's not there. Or any other like that, grants and donations. All these are also considered to be the sources of revenue to the government other than taxes. So clear now? Let us sum up once again. Non-tax revenue sources mainly fees. First one is fees, including the license fees and all. Second one, fines and penalties. Third one, I think, escheats. Fourth one, special assessment. Then fifth one, I think, forfeitures. Then 6th and 7th are small other sources like that profit, dividends, interest, and other things like that. Clear? These are the major sources of revenue to the government in terms of non-tax revenue. Hope you enjoyed the class. Tomorrow I'll come with the other part of this one, capital receipts. Thank you.